Earlier this year, I doubled my money on a trade in Micron, and what I'm about to share with you is the stock that I believe has the potential to be the next 100% move. Now, of course, what I share with you isn't financial or investment advice. Don't just copy what us strangers on the internet do. Do your own research. And what I want to share with you today is how to do that research, because I think that's the part that's missing for a lot of people. So do your own research, make your own decisions, and get really good at managing your own money. So today, what I will cover with you is how I found this stock and why I believe there's more potential here than in Micron, how I analyzed it, where I think it's going, the exact trade that I entered, and how you can play it on the safer side with even less risk. So this trade, I shared it inside of the 50K Club earlier this week, and I've shared in there my full research on it. I've got a full half an hour video in there sharing exactly the questions I asked, where I looked, the answers that I came up with, how I dug even further. So if that's of interest to you, the link for the 50K Club is in the description. I would love for you to come and join us. So with that said, straight out of the gate, the stock that I'm talking about is SK Hynix. SK Hynix are the largest high bandwidth memory supplier in the world. They've got record profits quarter after quarter, and they're still forecasting even higher. So that to me is a good sign. Plus, they've had a drop of 55% off of their all-time high. Drop of 55% to get back up there, that needs a move of over 100%. So, how did I find SK Hynix? So Micron, after I doubled my money, it became out of my price range to buy and sell options on. So I went searching for an alternative in the same sector. And the cool thing is, SK Hynix was never a possibility because it's a South Korean stock, not on the New York Stock Exchange, until it became a possibility. So once it became tradable, i.e. listed on the New York Stock Exchange, I started my research. And not only did it list, it listed at a price range that I was comfortable with to have inside of my 50K account. So what was I looking for? I spent time looking for what's the next stock that I want to hold and sell covered calls on, or what's the next stock that I want for a leaps position, or what's the next stock that I want full stop, right? But so I was looking for something that had come quite far off of its all-time high, meaning it's got room to go back up. But this is the key part. The stock needs a reason to return to the all-time highs. A 55% drop doesn't mean we're going back up. That part is important. There are so many stocks that drop 55% off of their all-time highs and just go on to continue to drop. So the first thing that we need to do is ask, why did we drop, right? So there's three answers that came up for me when I asked that question. Number one, profit taking. Number two, leveraged ETF unwind. Number three, memory cycle noise. Let's very briefly dig into all of these. Now, profit taking, that's quite simple to understand. After a 230% run in just 6 months, funds are well over allocated. They have to sell to rebalance, and that's a non-negotiable, right? Funds that hold this stock can only hold a certain percentage of it in their portfolio. So they have to sell, hence some selling pressure. The other thing that happened that was a little more kind of what is happening is the leveraged ETF unwind. Now, if you haven't watched my leveraged ETF video on how leveraged ETFs work, do so. I'll link it in the description. It'll help this make a bit more sense. But in short, South Korea launched some additional leveraged ETFs, right? When the stock drops on a leveraged ETF, they have to sell. So SK Hynix, for example, a 2x leveraged ETF has to sell stock every day that the stock drops. And that's in order to maintain a 2x exposure. 2 times leverage ETF simply means they will hold 2 times worth of the stock, not that you'll get 2 times the returns indefinitely. So what does that mean? As the stock drops, the ETF is selling, that's adding more supply to the market, therefore putting downward pressure and lowering prices. Then, of course, the price drops again. So the leveraged ETF has to sell again, which puts more downward pressure, which then in turn also triggers stop losses on accounts, creates more downward pressure, and so that cycle continues. This is why, if you remember, the Kospi had multiple trading halts throughout the last sort of 30 to 60 days even. It's because of this selling pressure. So some of the drop was due to this. And then the big one that actually needs more digging is memory cycles. So memory has always been cyclical. It booms and busts, booms and busts. But the part that's getting tricky for people to factor in is that we have never had an AI cycle. So the last memory boom and bust cycle was driven by phone and computer demand during COVID. So we're all sitting at home, we're bored, we get all this stimulus money, we go buy all the fancy new things. We buy new laptops, we buy new phones, we buy new PCs. And what happens is all that unexpected demand pushes up the price of memory as supply can't keep up. Then what happens? Supply improves, the demand decreases, therefore the prices decrease. And this has typically been the cycle of memory. But analysts and investors are having a really, hard time working out this cycle. We're in the boom, we know that, prices are sky high. But where's the bust? That's the question that we need to ask, because as soon as we get the bust, then we've got some problems potentially. So let's just look at the facts. I like facts. I'm coming all the way up the top here because I keep coming into my writing. So memory facts. SK Hynix has said that 2027 is expected to be the worst year for memory supply in the industry's history, meaning they just don't have enough supply. Customer demand, it's expected to remain above SK Hynix's supply capacity even beyond 2030, and major customers are still requesting more memory supply, right? So that's directly out of the mouth of SK Hynix. That's one company though. When we're looking at an entire sector, it's important to look at, well, is it just this company that can't keep up with supply, or is it industry-wide? Micron also said 2027 is now expected to be tighter than 2026. Customers are still seeking more memory than Micron can supply, and Micron also expects supply to begin improving gradually in 2028, but they explicitly said that there is no line of sight to when supply will actually catch up with demand. So they think that supply will improve in 2028, but not that in 2028 will necessarily catch up with demand, right? When you're doing your research, one thing I want to say, it's important to get the facts from the source. So don't just ask ChatGPT for an answer. Ask ChatGPT, Claude, whoever, to specifically go to releases from Micron, earning reports, right? Micron had an event earlier this month. Get the words that came out of the representatives' mouths at those events, because otherwise all you're doing is getting someone else's opinion, not the facts. So what can we assume from this? We've got years ahead of us, right? One consensus that I think we can agree on after looking deep into Micron and SK Hynix, we've got at least all of 2027, right? Both companies have also committed to more manufacturing. They're expanding capacity, but this extra capacity won't come online until 2027 with SK Hynix first, and the ramping will be slow. We can't just bring on this extra capacity. It takes construction, it takes time. So where's a potential problem, right? It's the reliance on hyperscalers. So if the hyperscalers stop or slow spending, then demand for memory could decrease. That's a real possibility. So now let's go and look at what are the hyperscalers saying? Well, firstly, none of them have hinted that they're going to reduce spending. Google's words when they went negative free cash flow for the first quarter, we will keep spending as long as demand for AI is there. So as long as the consumer is utilizing AI, Google is going to continue to spend. We can also extrapolate that that means hyperscalers in general will continue to spend. So, question we ask, do we believe that the demand exists? For me, the answer is yes. So I don't believe that consumer demand will decrease. I think that we've barely let the cat out of the bag when it comes to consumer use of AI, right? And that's because of this part, agentic AI. So this is in its very, very, very early days, right? And the CEO of NVIDIA has come out, and this is what he's been talking about, is that agentic AI requires between 100 and 1,000 times more compute than generative AI, right? What's generative AI? Hi, ChatGPT, can you work out this sum for me? What's the best for this? How do I do that? It's you and I talking to ChatGPT, essentially using it as Google, right? Agentic AI is AI agents. This here is the future of AI that people talk about. This is where AI is doing the work. AI is logging into things. AI is running the process in the background. AI is doing the work of a human and just spitting out the final piece for either the human to approve the work, to check the work, or for another AI agent to approve the work and become the next step in that process, right? So that's the part that I believe is in super, super, super early days. So if we believe that AI agents are in the early stages, then it's very plausible that the memory cycle is nowhere near the peak. Now, granted, we don't know where this will end, but I believe at least that we've underestimated AI at every step of the way so far. I don't think that there's anyone that I've heard talk about AI who's overestimated where we might land, because at every step of the way, we're just blowing out all of these, what's the word I want? Thoughts, things that go into the future, but we're underestimating, basically. Then the question becomes, what about valuation, right? Valuation is important. So is SK Hynix still overvalued, or even was it before? And my question to that is, compared to what? So not compared to where it was, not compared to where it's been, but when I look at the value of a stock, I'm looking at what is this valued at compared to the sector. This is important because this would have kept you out of trades like, for example, SoFi. So that's my research in a super, super nutshell. I want to come now into some charts and show you a couple of things, and then I'll show you the exact trade that I've taken. But before we do that, that's, like I said, a teeny snippet of the research I've done. Do your research. Talk to ChatGPT. Dig. He gives you an answer. You question it. He gives you another answer. You ask, well, why? And you start to form your own opinion. That is what's going to keep you in trades that you're comfortable with, rather than just following someone blindly into a trade that might not be right for you. Okay, so the first question that I want to be able to answer is about valuation. So all I've done in TradingView, I've gone to indicators, and I'm going to add on this price to earnings forward. And I want to hang out here in SoFi for a while, right? So SoFi, let me get rid of the RSI for now. SoFi, even when it was through these $25, $26 ranges, was trading at 40, let's call it 50 price to forward earnings. SoFi is fundamentally a bank, right? banks' forward PE is typically sub 13, 14, 15, right? 13 at the moment for Bank of America. Citibank, right? So when I'm looking at a valuation, I don't care that, you know what, back up here, SoFi got to as high as, call it 80, and now it's down to 40. Oh, it's cheap. No, because for the sector, and that's what we're doing here now, right? Look at where we are trading now. SoFi's come all the way back down to sort of 24 PE. SoFi is repricing for the sector that it actually is in. So let's come and look at SK Hynix. Now, when I'm looking at SK Hynix, I'm looking at this ticker here, 000660, because this is the stock that's actually on the South Korean exchange. So it's got all of the history, right? So if I look at this stock, when it was at its tippy top high up here, it was trading at around about an 8, right? Down here, it's now, as of now, it's trading at about a 4, and it got as low as just above 3. That number on its own is meaningless, right? What are the competition doing? So who's the competition? Let's look firstly to Samsung, because Samsung is also on the South Korean exchange, also in memory, right? Okay, that's pretty similar. That's at around 4 now too. Is it overvalued or undervalued compared to the sector? It's equal value, right? The other competitor, Micron. So Micron being same sector, different country, of course. What's Micron? Micron's at 6, call it 6.5. So the question fundamentally being, is this stock over or undervalued? No, it is valued. It is equally valued against its competition. So SK Hynix potentially has a run all the way back up to all-time highs. So from where we're trading today, back up to those all-time highs, that's a 75%, 76, 80% run, right? When do I think we get there? Who knows? Honestly, I wish I had that crystal ball. But the next question I'm asking is, are we more likely to go up 50% or down 50%? So the next part that keeps me saving my trade is, what's more likely? Is it more likely that we get another 50% drop? Well, that would take us all the way back to literally as far as where we traded in January of this year. Do I believe that that is likely to happen? I don't believe it's likely to happen, no. If we get the move up 50%, do I believe that's likely to happen? Yes, I believe that's likely to happen. Can we come back down to these levels? Probably. So I think that we potentially stay in this range for a little while, and that is a-okay with me. So what did I actually buy? So I bought the US version, SKHY, and this is why I'm looking at the actual SK Hynix chart, because this is nothing. This is nothing to see right now. So I bought at 154 on last Wednesday, so the 12th of August. I've since sold covered calls. I should have double checked. I think I'm at like $500 profit on my covered calls so far. And my plan is to just continue to hold this stock and sell covered calls. How much of a run up will I get on it? I don't know. We will wait and see. But how I play this is, now that I have the shares, I sell weekly calls, and either I roll them up if need be, or if we start to drop, I potentially roll them down to collect more premium. So it becomes a bit of a balance between choosing the right strike. I'm never going out to a 30 DTE with this. I'm always keeping my days to expiry close. I've got a video that I've done on covered calls that shows this, but this particular video I wanted to be more so about how to find the stock, right? how to do the research, and then to be comfortable with actually having your trade and owning this particular stock. So if we drop down a bit further, am I going to freak out? No. Why? Because I've done the work that has me feeling secure in the trade. Now, let's wrap this up with what can you trade that might be potentially less risk and less capital? DRAM. So DRAM is the ETF for memory. It holds majority, about 75% of its weighting is across SK Hynix, Samsung, and Micron. So you don't have the single stock risk, but all of the research that we've just looked at as far as memory goes, if you believe that thesis, if you want exposure to memory stocks, then DRAM is a good way to do so. Great premium in there, it's very rollable, and it also, it comes back to all-time highs, has a huge move ahead of it. 46% from where we're currently trading. So that's how I like to kind of do a bit of evaluation. Like I said, I shared the full breakdown inside of the 50K Club, along with more of how you can do this on your own. Because before you enter any stock position, I truly believe this is the stuff that you should know about the stock that you're trading, rather than just someone on YouTube said it's good, so I'm going to enter it. All right, that is it for now. I hope you enjoyed this video, and I'll see you next time.